I'm going to be talking about the impact that blockchain has on the accounting world and how we report financial information. Blockchain technology is a very promising technology, and in this space especially, it's going to be hopefully very disruptive. So I have a Durham here. It's just a 1 Durham. Would somebody like it for just the presentation? We got one volunteer right here. Thank you. So I'm going to hand him a Durham. And typically in accounting, what happens is I gave him 1, and therefore I subtract 1 on my accounting statements, and he increases his statements by 1 as well. So it's -1 and +1. The problem is we both record this information separately. I record it on my accounting informational system, and he records it on his accounting informational system. Now, typically everything's okay. But things happen, mistakes happen. It's very possible that this gentleman actually records the information wrong. It happens all the time. There's millions and millions of transactions that are processed in a given day for large Fortune 500 companies. And so it's very possible in this circumstance that he records the information wrong. I could also be malicious. I'm a CFO and I want to cut my expenses. And I decided, you know what, I didn't give him actually 1 Durham. I actually gave him 0.9. And therefore, I can increase the assets on my balance sheet and make my company even look more profitable. This is a problem because the control is in the hands of the CFOs and their teams. So what blockchain ledger technology is, you can think of it as a general ledger. It's a store of record where, in our circumstance, this gentleman and myself both signed the transaction that he received 1 Durham and I gave 1 Durham. And we both signed the transaction and it's stored permanently on the blockchain ledger. If I record the information on my accounting informational system and there's a problem or a mistake or something like that, we can go to the provenance transaction on the blockchain ledger and look to see for proof what the actual amount of the transaction was. This is very, very important, and we call this thing triple entry accounting. Historically, with double entry accounting, for every transaction you record a debit and a credit on your own informational system. But in triple entry accounting, you actually have 3 parties. You have Alice, one counterparty, Bob, the other counterparty, and then the third counterparty, which is the blockchain ledger. Not only that, you also have 3 records. Alice recorded the information on their system, Bob recorded the information on his system, and the blockchain is also recording the information. And that's why we call it triple entry accounting. So there's a lot of problem with current accounting informational systems. There's human errors, lack of precision, possible opportunities for fraud of accounts and transactions because it's all in the control of the entity. There's a lack of standardization around accounting models and access controls. It's very time-consuming. Audits they're inefficient. They're there just to test certain types of transactions, and we'll talk a little bit about that more. And it's slow and complicated to actually transfer assets between these systems, between these businesses. So these are just a few of the corporate accounting scandals that have happened here in the last decade or two. Some of these you might be familiar with, but we're talking about huge amounts of money. Enron, $74 billion in shareholder loss. Lehman Brothers, the whole financial crisis, $50 billion in disguised loans. This is the type of problem that the blockchain technology is trying to solve, is these types of mistakes and adding more transparency to our financial reporting system. So the big shift is moving from what we call enterprise or firm-level systems to industry-level systems. And that's really what blockchain technology is enabling. It's a move for these systems to start to be all connected together at the industry level where we can cooperate together as a very, very large group. So when we start to build these industry-wide systems, we need, in the accounting space, a shared data environment. We have to remodel financial information. So what we're working on here in the US, North America, and as well as Europe is setting shared data infrastructure standards. I work very closely with the Big Four and a lot of the regulators in both continents to do that. We want to be able to capture transactional information or transactional data from multiple parties, from multiple different types of corporations. So we can have this permanent record or permanent store on the blockchain. And we can use this information as source documents. So when there's something goes wrong or when we're challenging the assumptions of the transaction, we can go back to the blockchain as a permanent record. So blockchain has a lot of properties. Atomicity. These properties is what makes it so important in the change from server to client infrastructure. So the entire operation runs or nothing does. It'll never fail, okay? It's immutable, it's permanent. Once the transaction is stored on the blockchain, it can't be erased and can't be changed. Secrecy. Once we have multiple transactions coming in, they can all be recorded on the blockchain without interfering with each other. The blockchain is designed to live long into the future. So once transactions are recorded on the blockchain, they could be there permanently as long as everybody supports the network. And lastly, provenance. All transactions can be inspected for origin. We can see where they're coming from, where they're originating, who the counterparties are, and how they entered into the transaction. There's also durability. There's no central point of failure on the blockchain. It's reliable. It's always available 100% of the time. It never goes down. Process integrity. The code operates exactly as how it's written. Okay, so there's no way you can maliciously change it once it's distributed on the blockchain. And then probably the most important thing, and especially to the balance and transactional reporting, is transparency. In today's financial markets and corporations, there's not a lot of transparency, and you don't have a lot of insight as investors and other stakeholders into exactly what the businesses are doing. So one of the things that transactional reporting does on the blockchain that provides is what we call transactional level assertions. Auditors, quarterly and annually, depending on what part of the continent and state you live in, they come into a business and they issue opinion on the financial information. The things that they test for transactional level assertions. And all these things can be baked into the blockchain. So they actually don't even have to test for these assertions, reducing the time and the cost it takes to actually go through and audit a company. Very, very significant. Also with this stuff, we can then move towards what we call enabling continuous assurance of financial data. So we can have real-time audits, real-time assurance of these businesses, and always assume that they're going to be in compliance and everything's going to be accurate from a financial statement perspective. So some of the benefits included are improved data integrity. You would think everything's accurate in these big accounting informational systems, but there are many, many, many mistakes that are made every single day. And then one of the biggest challenges is because these systems don't interoperate. One company uses a SAP system, another company uses an Oracle accounting informational system, and they don't interoperate. We anticipate a lot of reduced informational system costs for these companies as well if we're using this one shared infrastructure with shared standards. Market stability. So once we start to record this information on the blockchain, what we anticipate is we'll be able to have real-time reporting of financial information. So you don't have to wait for quarterly or annual reports of how your businesses are doing. As an investor, you would be able to see at any given moment in time exactly how the company is doing. You'd be able to understand counterparty risk measurement. So for instance, if you're a bank and you decide to issue a loan to a company, you would be able to assess the liquidity of that business on any given second by looking at their financial information. Obviously anticipated significant reduction in auditing and insurance expenses. We expect the whole industry to change, just like the taxi industry and the smartphone industry had on the taxi industry. And lastly, the other cool thing that we're thinking about is what we call enabling multi-sided transactions. Typically, businesses do transactions with just one counterparty. A multi-sided transaction, an example would be, imagine you go up to a point-of-sale system and you buy a good. You actually have three parties involved. You have the merchant, the customer, and then most likely the local government that's collecting a tax. And under multi-sided transactions, what we can do is we can pay the local government entity taxes directly right away without having to go through the business, obviously increasing the tax collectability of governments all around the world. So once we start recording this financial information on the blockchain, it'll have a significant impact on the whole accounting space. Everything from managerial accounting, this information can be used for tax accounting, like we said, real-time reporting of taxes, sustainability accounting, understanding exactly what these businesses are operating in, what types of worlds. Investors is probably the most significant impact. As an investor, you would get real-time insight exactly as to how the corporations are operating, and then other external stakeholders that require that financial information. So some of the characteristics and opportunities we see in the space are public organizations with high degrees of corruption, sectors with high degrees of fraud, anywhere where there's paperwork or complex transactions. Also high-risk, high-value transactional events, industries with convoluted supply chains, businesses or organizations with terrible credit, and then lastly, organizations with complex corporate structures. If you're a large entity and you have many subsidiaries, this is a great opportunity to be able to get insight into all of those child companies that you own. And so going forward, I work very closely with the Big Four, and what we're starting to do with them is outline exactly what the role is going forward in this future. And so we think there's 4 opportunities for companies that are cutting edge, innovative, and want to get on the front of this big, big change. The first one we kind of alluded to a little bit earlier is identity attestation. So the blockchain, even though we can operate and store the blockchain, we're still going to need offline trusted parties. So companies to identify and attest to different identities. The next thing that we're very, very focused on with the Big Four is attesting to assets. So if you have a big tractor in the middle of some farm, what we want to do is basically tokenize that asset, place the asset on the blockchain, and we need a trusted party there to go in periodically and make sure that the tractor actually exists and that the blockchain actually represents the state of that tractor. The third is what we call a smart contract attestation. So we talked a little bit about it earlier, but the blockchain is just a technical protocol layer. On top of that, there's smart contracts or decentralized apps. And they're going to get very, very complicated in nature. They're going to be designed to operate for financial transactions. So imagine bonds as a smart contract or loans being designed as smart contracts. All that information gets very, very complex, and we expect companies to attest to those types of smart contracts. And then the fourth opportunity, as we see, is blockchain node operators. Those are the people who are running the computers that actually run and operate the blockchain. And we see that as a huge significant opportunity in the private and permission networks. My name is Griffin Anderson. I work at Consensus in the Big Four and regulators. And so there's a huge shift right now in North America and Europe to set these standards, to build out this infrastructure, and it should be very, very big. Cool, thank you so much. We'll open it up now for questions, I believe.
Great job, Griffin. My question is, so you had those roles, and I think that with these roles, where do you think the government could fit in for these roles?
Yeah, so the UAE, they could actually run and operate the blockchain themselves in a private or permission sector. They could be there to regulate the smart contracts to make sure that they're actually written correctly, that they can determine what the rules are for loans and how they're built and so forth. And those are probably the 2 biggest opportunities for the government itself. Government entities, obviously asset attestation is a very big one in identity attestation.
So all of them?
All of them, yep.
Great, thank you.
We have a question. Well, not necessarily. So right now there's a big push to build this on top of the Ethereum protocol, right? So it's going to be happening all across the world right now. The UAE can come in and say, you know what, we're going to do our own financial platform that's built on top of the blockchain, and we're going to run and operate our own blockchain. But I can tell you there's a huge, huge international push right now to run an international type blockchain where all transactions, no matter where you perform them on the globe, between whether it's China and Europe or Africa, it doesn't matter, to record this information on the blockchain. Yeah. Yeah, please, Andrew.
So, like, you could consider the Ethereum protocol similar to the internet protocol?
private ones that can be governed by anyone who wants to set one up. So on a cloud, like Duke, you could have a permissioned government one. And you could have business processes that splay between the private into the public, depending on what that business process is.
For the private one, the business model for the private one is to sell your information to, for example, government.
It's whatever the business wants it to be. I mean, in its simplest explanation, this would replace an Oracle database, and with an Oracle database, you can do whatever you want. So if you're a company and you want to create, or a person, or a government, and you want to create a private blockchain, it's yours to do whatever you want with. But you've got to pay for the license of that private blockchain. You've got to pay the cloud fee. And with that, similar to an Oracle database, you can do what you want. The difference is that the blockchain databases have a significant advancement in transparency, in interoperability, and in fluidity, in removing kind of intermediaries than the databases of yesterday, like Oracle and SAP.
Griffin, one question. So in the processing, I understand the ledger. You know, to define a ledger is rather simple. The debit and the credit and the account structure, days, etc. Now, in case of like an accounting system, or like let's take a core banking system, there's a loan contract, there's a syndicated loan, or it's a trading platform, there's a derivatives transactions, and there's like an underlying data model for that, which is quite complicated. So in a blockchain setup, if I'm able to share this, for example, loan contracts, not a basic property contract, who defines the underlying model to capture the full elements of the data sets that are normally in an Oracle or an SAP kind of a system?
So historically, if you bought an Oracle system or an SAP system, they define the data sets themselves. Right now, we're working with regulators in North America and EU to set those standards and to make them very interoperable, so it can be used for any type of transaction, any type of process. But that's what everybody's discussing right now. They've been discussing the last 3 months, and there's a big fight right now between regulated entities to be the standard, set the global standard. And I can tell you, there's a lot of people working on this to set different use cases. Yeah. XBRL is one of those people. So XBRL, for those who are unfamiliar, in the US and around the world, one use case of XBRL is if you want to submit your financial statements to the local entity, they were designed at first, SAP did not talk with the government's system for submitting financial information. Oracle's did not communicate with that as well. So XBRL was a standard to mark up the financial information so it could be read by the government entity's system. XBRL is one of those standard-setting bodies that we're working very closely with to set the standards going forward. But instead of the accounting information just being marked up, we're actually at the database level, the data model level, designing how it should be structured. Yeah. But they are part of the conversations very, very actively. Yeah.
First of all, thank you for the presentation. I'm just trying to understand how refunds and rollbacks would happen in a financial transaction on the blockchain. They wouldn't be much different from the incumbent systems, or would they be a lot different? And how would the consolidation happen? Because it happens pretty much synchronously all the time, right?
Yeah. Yeah, so it would be baked into the smart contract level. So for instance, the rules of how the refund would work, when the item gets returned, for instance, if it's an in-store purchase, is all baked in at the smart contract level. So you would see just 2 transactions, one on the blockchain of when they bought it, and then a reverse transaction when they returned the item, if it was a refund. But that's all baked in at the smart contract level, yeah.
What about a rollback?
A rollback as well. So you literally, if you can imagine drawing a line through the transaction on the blockchain, and it just didn't exist or something like that, the same thing happens with smart contracts.
Basically, the transaction has not been registered on the node or the blockchain.
It gets void, but the transaction still kind of exists, but it's voided out. Yep.